Hello everybody, welcome to the Technical Analysis webinar. My name is Troy. I'll be presenting for AvaTrade this afternoon. As always, keep in mind that no one trade is guaranteed to profit. There's risk of losses with each and every trade that you take. But obviously there's also a good potential for profits with each and every trade that you take, which is why we're all here, obviously. So we're going to go over from an educational perspective, not to be taken as financial advisement, but from an educational perspective, some ideas with technical analysis. We'll look on the live charts and go over some concepts and strategy ideas on how to get into trades, get out of trades, maybe with opportunistic entry points and exit points, and in a way that hopefully helps you manage your risk in a way that makes sense for yourself as well. There are different ways to manage risk. You obviously can use stop loss marks. You also could set up hedge positions, which we could take some time to go over if you'd like, how to hedge trades. You also could use a special feature that's found on our award-winning mobile app, AvaTrade Go, and also on our web trader platform. This feature is called AvaProtect, and it's a unique way to manage risk for defined time periods for a small premium cost. And so that's something that you could check out as well, and maybe we'll take a quick look at it today in case you have any questions on how to use that. But in some way, it makes sense. Manage your risk, watch your trade sizes, watch your exposures, and as you build a good foundation in terms of strategy, those two combination of things together, good risk management and good strategies, hopefully will improve your P&L at the end of the day. What is technical analysis? Real quick, I know we get a number of beginners in the webinars, so we try and be basic, but also advanced enough for you experienced traders that you're going to benefit from the webinar as well. So what is technical analysis? Basically, it's looking at the historical movements on the candlestick charts to see if we can recognize patterns, price levels, trends that maybe lend some predictability to future movements. And so while the history on the chart is no guarantee of the future in terms of patterns and movements, it certainly can be helpful in terms of looking for preferable entry points and exit points, and hopefully being able to have some predictability to the movements as you move forward in time. And there are different ways of doing technical analysis. It could be with manual methods, which is mostly what we do in the webinars, where we find our own price levels and trends, etc. You can use indicators, which help you in that regard. They many times will tell you, based on the indicator settings, when they believe the market is overbought or oversold, when you might want to buy or sell. Typical indicators might be the MACD, the RSI, the stochastic indicator, Bollinger Bands, etc. And so those are basically doing the technical analysis maybe for you in a more robotic way, I would say. I always believe that you're better off doing the manual methods of technical analysis because you have the flexibility of understanding the fundamental news as well and having a preference of which signals to trust better than others in terms of what the indicator is spitting out to you. As we go along, please ask questions. Please give input if you'd like as well. Don't wait to the end to ask questions, as this slide might indicate you should do. As we go along, feel free to interrupt me, ask questions, give input, etc. Now, this is our main landing page, our main website, and I'll show you how to get to the web trader platform, where to find the AvaTrade Go mobile app, which both of those will trade on your MT4 and MT5 accounts, and they have those risk management features that I was mentioning, AvaProtect, and some other features I think that are helpful for even experienced traders when opening trades to understand your risk, your exposure, margin requirements. All of that stuff is calculated for you with the web trader platform and our mobile app. So we'll go over that in a moment. Now, the focus today is technical analysis, and we'll do that on the live charts, but it's always a good idea before you do your technical analysis to understand which way the wind is blowing in terms of the fundamental news. So you have maybe a preference of what entry points you'd like to find. If we look at the major headlines right now, the Feds in the US, again, kind of giving some signals that maybe they're getting ready to back off on their bond buying program, which has been helping to prop up the banks and thereby prop up the US economy with a really big bond buying program that the federal government has been buying bank bonds, which then gives easy money to the banks to then lend out very low interest loans to businesses, et cetera. And you see the connection to economic growth then. So this bond buying program, there's been talks now for a couple weeks. Maybe they'll scale it down because the economy's been doing so well. The idea here is if they scale that down, then you could see a rapid strengthening of the US dollar. The US dollar has been very, very weak over the past year through the pandemic, and largely because of huge amounts of stimulus coming from the federal government in the US. I see a question popping up, so I'm pausing. Ronald, if you have a specific question about one of your trades, if you're having some issue with it, I would say go to our online chat or email our support team, or better yet, if you have an account manager assigned to you, contact your account manager directly about a specific issue like that, okay? All right, so what I was saying is the US dollar weakened quite a bit over the last year plus because of trillions of dollars in stimulus from the federal government, meaning they're printing trillions and trillions of US dollars and handing them out for free. That's going to weaken any currency if you do that. And then also this bond buying program, low interest loans, zero interest rate, etc., that really weakened the US dollar a lot versus other currencies. And that helped the stock market go up as well, even during the COVID pandemic, because of all of this stimulus. So weak US dollar, Wall Street loved the cheap loans, the free money being handed out to the economy, and new highs kept being reached with not just US stocks, but major stocks and indices all around the world. This was going on with economies being propped up by central banks. Now, if they start to scale this back, which is what this article is talking about, they start to scale back some of this stimulus, and in this case, they're talking about the bond buying program, you could see the opposite then occur. You could see a sell-off on stocks, at least temporarily anyways. You could see a strengthening of the US dollar, at least temporarily anyways. Don't forget the US is still working on more stimulus, so that could then weaken the US dollar again. But in the short term, if there's talk about scaling back bond buying programs, you could see a strengthening of the currency and a sell-off of all these indices and stocks that went rising up with the cheap, easy money. So that's a headline to keep in mind. And since this article came out today, you'll see when we look at the charts, US dollar is strengthening a bit, perhaps. You're also going to see the volatility is up, that the stocks maybe are pulling back a bit, etc. So you understand the environment that exists right now before you place your trades. Next headline, US bank profits rose 29%. Credit losses adjusted downward. Boy, that sounds like really good news, right? So good that, in fact, what might happen is the US government might scale back bond buying. So it's kind of a bizarro world here. Good economic news might cause sell-offs in the market. Why? Because the better the news, the more the federal government might decide, yeah, we don't need to have these stimulus programs so much anymore, the bond buying programs, etc. So the better the economic news, the more the fear of the stimulus, the programs that have been propping up the economy, the more fear comes that those will be taken away. Okay, so good economic news is maybe leading to a pullback in the markets rather than a climb in the markets. Another headline, inflation questions keep stocks in check. Okay, what we're talking about here is if if the numbers that are coming out today that give an inclination about inflation, and let's take a look what announcements are coming today. We've got core durable goods out of the US. We've got GDP numbers. And right now, most people, most investors are focused on these GDP numbers coming out of the US. Why are we US centered here in what we're looking at fundamentally? Because the US is the largest economy in the world. And so it's just the way that it is. The world is looking at what are the GDP numbers out of the US going to be? Okay. Not that we don't also look at European Union numbers, China numbers, etc. The China numbers maybe weren't as good recently as expected because of an increase in the cost of oil and different commodities. Oil prices went up. Okay, so it's harder to do business. It's more expensive to do business and have energy to fuel business if commodity prices are up. So that hurt the profit margins in China recently. That's what the reports that came out. Now we're looking at if GDP numbers come in today higher than expected. It's expected to show 6.5% growth. The price index is expected to show 4.1% growth. What if these GDP numbers come in higher than expected? 7% on this one, 5% or more on this one. If that happens, then for sure, this idea here of the US maybe scaling back bond buying will catch steam. Because if the GDP number, the GDP growth is better than expected again, like it was before, then more and more there's going to be pressure to stop supporting the economy because you don't want hyperinflation. If the GDP growth is much higher than expected, then inflation fears kick in. You say, wow, that's too much growth. That's inflation. That means the US dollar is weakening quicker, economy prices are going up faster than expected, etc. And so if that happens, and we'll also be looking at the durable goods orders, we'll be looking at PCE prices. So if these numbers come in too good, you could see a pullback in the market, which again seems like bizarro world, but good economic news could actually cause the market to sell off a bit because of fear that the stimulus then will be taken away with the economy doing too good. So that's something to keep an eye on today. And that's why if you look here, the volatility index is up about 3.5%. Okay, the VIX volatility index, otherwise known as the fear index, it's up right now. And not surprisingly then, the futures, the US futures are in the red. They're dropping. You see they're red. Yesterday finished in the green, but today the futures are red and fear is up. So what does that tell you? There's nervousness about exactly what we just looked at. There's nervousness about bond buying programs maybe being scaled down. There's nervousness that these GDP numbers could come in too good, that the pricing numbers, PCE prices could come in too high. And if that's the case, boy, the economy's starting to roar then, right? And if that's the case, then maybe there's fear of the stimulus being taken away, and we might see a strengthening of the US dollar and a dropping of some of the markets. That's the situation right now, fundamentally. We're going to get on the charts and see how can we take advantage of that current fear that's on the market in just a moment. So real quick, if you log in from our main website, you're in the web trader. If you want the AvaTrade Go app, which has many of the same features of the web trader, you can find it here. Trading platforms, AvaTrade Go. You can get it from the major app stores. Just follow the appropriate link. And what you'll see when you log in here is our web trader platform. And the AvaTrade Go app has many of the same features. Real quick, if you want to use AvaProtect, it's available on gold, silver, and FX pairings. So maybe you're taking a shot on gold or something else today with those GDP numbers coming. Maybe you expect a big movement when those numbers are released. We could see, gold's near 1900 an ounce right now. Maybe you think those GDP numbers could come in too good And then there's fear of the bond buying programs being scaled back, which then maybe leads to a strengthening of the USD, which could temporarily pull gold down, right? I know it's like we're trying to connect the tea leaves here, but that's trading, trying to anticipate what the potential movement could be. So let's say I think, okay, maybe I want to sell on gold now, put my stop loss above, I don't know, 1900 or 1950, wherever I think I might want my exposure to go to. And perhaps I want to take a reasonable trade size. I've got a couple thousand balance here, and I decide I want to take 20 ounces. $20 profit if I have 20 ounces. For every dollar, it goes the right way. And so I maybe put my stop loss. I say, okay, I'll put my stop loss at 1925. Above 1900, there's my stop loss. And I take a look and I say, take profit. Maybe I think it'll drop to 1850. Let me set 1850 as my take profit. Okay, so then, I clicked on the wrong spot. Let's get it back up. 1850 and change. Okay, so, and I did it again. Apologies. And we'll put the 50 in there. Now we'll have 1850 even, which is what I was trying to do. There we are. So now I see my exposure is 588. My potential profit is 911. But I might like that potential profit, right? Boy, that's like a 50% gain on my account if that happens. But maybe I don't want to risk so much, 588, because that's more than a quarter of my entire balance with this demo balance that I'm working with. So if this is my live account, I might say, I don't want to risk that much on one move. So maybe I say, okay, in lieu of a stop loss, maybe I use AvaProtect. And I say, that announcement today, the GDP numbers, those big numbers are coming out today. So I only need protection for 1 day. So I could put 1 day protection and the cost is $175. Maybe I want 2 days. It's still only $175. So that's a no-brainer. I'll take 2 days protection for $175. My total risk is only that. If it goes the wrong way, the protection pays back any losses during the protected time period. I just have to pay attention to when my protection ends in 2 days and then manage the risk if the trade is still running. Any profit would be mine. So maybe I'm going to go ahead and do that. So I take a position, sell, I put protection on it for 2 days, and there I go. Okay. It's not a bad spot in terms of the resistance level, just below 1900 as a price. Technically speaking, fundamentally, I see there's fear on the market. A lot of times US dollar strengthens with fear, and that could help pull gold down. And the fear is about stimulus maybe being scaled back, right? Which should strengthen the USD. And gold tends to drop when the US dollar strengthens. So it's something that fundamentally it might make sense, this type of move. And now we're protected for those 2 days that we can't lose anything beyond the premium cost that we put in. And to make back what I paid for the premium could happen real quick because I have 20 ounces of gold in that position. Just $10 movement the right way in the next 2 days makes back what I paid for the premium plus profit. Gold can move $10 in a matter of a minute, right? Or even less. So that might be a type of move you do. It's based on technicals and also fundamentals, and it's protected with AvaProtect. Good question. Wakas, you're saying with fear, doesn't gold go up? And the answer is sometimes yes, sometimes no. It depends what the fear is from, right? If it's fear of inflation, yes, gold tends to go up, because if the fear is US dollar is going to weaken, that there's 4 trillion more in stimulus coming, something like that, then that kind of fear drives gold up as the US dollar weakens. If the fear is that they're going to scale back bond buying, that act of scaling back bond buying would likely strengthen the US dollar. So fear of a strengthening US dollar, right, tends to pull gold down, not up. So if the fear is of more inflation, yes, gold tends to rise. If the fear is that stimulus will be scaled back, US dollar tends to strengthen on that kind of fear. So it depends. But that's a very good question. This kind of fear, by the way, if it's fear that causes US dollar to strengthen, you'll probably see oil drop as well. All the commodities, as US dollar gets rushed into, if people say, oh, US dollar might strengthen now, and everyone starts buying the US dollar, then they're selling the other instruments, right? And so oil tends to drop as US dollar strengthens. Natural gas tends to drop as US dollar strengthens, as well as gold, right? It's not 100% relationship, right? But they're very much correlated in that way. All right, so now let's go to the MT4 platform, and we'll take a look at some possible trade opportunities based on technical analysis, but also keeping in mind the fundamental news right now is a bit of fear on the market. Okay, so I happen to have GBP JPY up. That was from another day. Let's look at maybe some US based instruments first. We look at oil, 1 hour candles. It's no surprise oil's pushing down. And I swear I didn't look at it at an oil chart today. But why has oil been dropping today? US dollar strengthening a bit, maybe. There's a sell-off because of a little bit of fear, sell-off of commodities. So the preferred direction right now, based on fundamentals, is probably to sell on oil. Right now, we see a resistance level on oil up around 66 and change. Resistance, 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 resistance. Let me get rid of some of these old lines that I drew. We'll delete these. Wow, I have a lot of lines on this chart. Okay, now all the lines are gone. Let's draw our new line. Here's the resistance up here around 66 and change. And I see a support level down here around, give or take, 65 and change. So we have about $1 between the resistance and the support. With the environment of the news today, I would prefer to find a resistance level and sell from it rather than find a support level and buy. So if oil happens to reach 66 or so, I probably would like a chance to sell with limited risk because I'm close to the resistance level. So crude oil right now, based on the fundamental news and looking at this technical analysis setup, I might go to a pending order, choose a sell limit, which sells from a higher point. And if oil reaches 66 or 66 and a quarter, let's say, if oil happens to spike back up to 66.25, I could put my stop loss at 66.65, risking less than 50 cents a barrel. If we want to do exactly 50 cents, then it would be 7.5. That's fine. Okay, stop loss 66.75. Take profit then 66.30. I'm sorry, 65.30. 65.30. 66.30 wouldn't have worked. Take profit's got to be in the right direction. Okay. And so there we place a pending order. Okay, so this is based on technical analysis, resistance level up around this level. So there's our entry price. This green line is my entry price just before the resistance. And my stop loss is above the resistance enough that it would really have to break the resistance before I give up on the sell. I don't want to get caught in a little false spike and have it hit my stop loss too soon. So I stretch my stop loss well above the resistance level, but not too far that I risk more than I want to. And then my take profit is right here at this red line. Okay. just before the support level. So my potential profit here is like double what I'm risking. Adley, good question. Yes, all the webinars are recorded. You can find it on our YouTube channel. There's a section for English webinars. By tomorrow, today's webinar should be uploaded. And you can watch Tuesdays, it should be there already, last week's, etc. It's the same type of strategies, even though the movements, the exact prices won't be relevant anymore. The strategies are relevant. If you look back at the old sessions that we've done, you can get repetition on the strategy concepts. Okay, Patrick, I'm glad you're picking up some new things. It's good. Okay, so in this case, I don't like the market entry point because we're too far from the resistance and too close to the support. And the market right now is saying you probably should be selling on oil, the fundamentals, rather than buying. So in this case, a pending order might make sense. If we get lucky enough to catch a price near the resistance, then you only have to risk a little bit to the top side of the resistance to go after double the potential profit to take profit before the support level. Okay, so that's an example of how crude oil sets up with the technical analysis and setting up a pending order with the preference of going in the direction that fear should probably move oil, which is the direction it already moved oil, which is down. Okay, so let's take a look maybe at gold. Okay, again, not surprisingly, you don't need the webinar ID to find it on the YouTube channel. You can just find it by name and date. Okay, so gold has been dropping as well. You see, over the past hours, why is gold pulled down? Because there's fear on the market. Fear on the market about maybe bond buying programs being scaled back, which then that fear tends to strengthen USD, not weaken it, right? So strengthening USD then, fear that pulling back stimulus would decrease inflation, right? Pulling back stimulus would decrease inflation, so down goes gold because of fears of inflationary tactics being scaled back rather than ramped up. And so gold pulls down. So gold is sitting on a support level right now, right about at 18, just above 1890. Okay, so again, you know, had we looked at gold 3 or 4 hours ago, you might have done a market sell because it was up above the support level. Right now, gold is on the support level. And you'd say, why not buy? And I would say because there's fear on the market and the US dollar might strengthen, and so it might break the support level rather than bounce. If gold gets up to the resistance level up here around 1910, then perhaps that's a spot where you say, ooh, I would love to sell from there. So you could put a pending order just like we did for crude oil, that if gold gets back up near this resistance level, you could sell. And I would say you might decide that the first resistance level here, you'd be willing to sell from, which is just around 1900. And that might make more sense because if it's truly a day where the US dollar could strengthen, then gold might not make it back above 1900 today. So if you want a more likely chance at taking a shot at selling on gold from a higher point, you might say, okay, if it hits 1900, I sell. Because there's a resistance level right here at 1902, 1903. So again, you could set up a pending order. That's a sell limit if you're selling from a higher point. And you could say, okay, if gold hits 1900, then I'm selling. Okay, just as an example. I'm not saying you have to do this, but the technical analysis has a resistance level at 1902, 1903. So 1900 as an entry point would make sense if you think gold should drop rather than go flying up today. So pending order, 1900, stop loss maybe just above this resistance, which then 1905. So you're only risking $5 per ounce in your position. And the take profit could be back at this support, which is at 1891. So we're going after about $10 profit, $9 profit per ounce, and only risking 5. Again, about double the potential profit to what you're risking. So now we have a pending order set up, and you might say, you know what, that's a little low. Maybe I want this, when I look at this, maybe I want it closer to this resistance up here. Okay, you could play with your entry point on your pending orders just by sliding the lines a bit. Okay, but I like right around 1900 or 1900 as an entry, because that's a round number. A lot of times resistance levels naturally form at round numbers like 1800, 1900, etc. And we see that indeed there is a resistance right around 1900, just above. So that entry point makes sense. This take profit makes sense if you're scalping, to take profit at that first support level. And we've got, again, about a 2-to-1 ratio potential profit to risk. Same as the crude oil pending order that we set up. Okay. We can take a look at some of the indices. Specifically, US indices may be moved by those GDP numbers coming later today, this afternoon, US time. So, or morning time US, I should say, after the market's open. So we're looking at, again, not a surprise, the indices have pulled down already. Why? Because of the fear on the market. Had we done the webinar 6 hours ago, you could already be in the money. But they're on the support level. Here's support, support, support. It's really tightening. And so, listen, if this bounces up to the resistance level up here, again, you could have a pending order ready to sell from the resistance, because we see the fear on the market about this bond topic, and also about the GDP numbers coming out later today. So a sell limit from up here. Let me ask you though, what if it just breaks the support level and starts to plunge? What kind of pending order will get you in? Instead of banking that it'll pull back up before it drops, what if you think it could just break the support and then plunge? What kind of pending order would get you in down here? You could put a pending order that if it breaks the support level right now, that you want to sell, because this support level, if it breaks, would confirm downward momentum. No, Margaret, you can't use AvaProtect on pending orders, unfortunately. You can only do it if you open it as a live market move. Good question. Sell stop, correct, Wakas. You were first. So instead of like with crude oil and gold, where we put pending orders hoping to get a better price before potentially selling, let's do the opposite here. Let's say that you want to say if it breaks the support, if it drops lower, you want to buy. So we could do pending order, and that's called a sell stop pending order. So sell stop sells from a lower point. So if it breaks the support and hits, let's say 41.75, if this hits 41.75, then it broke the support level. In which case, boy, it must have been bad news for the market if it broke the support level, right? So, or maybe I say 73, just to make sure I'm below that support. And then my stop loss can just be back above that support, 41.85, something like that. Okay, there's my stop loss. Let's keep some round numbers. Let me say 41.93. So then I'm exactly 20 points to my stop loss. 41.73 entry, 41.93 stop loss, and then my take profit could be down at a major support level like this one down here, 41.45. And let's say 43, so we keep these round numbers in terms of distance from entry and place. Okay, so now we have a pending order that if this support level gets broken, if it drops to here, then boom, I'm selling. Because a lot of times what happens when a support level breaks, you get a breakthrough candle, which is a rapid, large candle that then once it breaks the support, continues with momentum in that direction. Not always, but many times. So this is the entry price. My take profit, again, is about double what I'm risking. So I'm going from 73 to 43. So entry price 41.73. Take profit 41.43. So that's 30 points to my take profit, and I'm risking much less than that to my stop loss. Okay, so again, a nice ratio set up. Now the question is, what if it does go up? Can I set up a buy stop? I'm sorry, a sell stop and a sell limit at the same time? Because either way, maybe I want to sell, right? If I'm not saying you have to believe this, but if you think the market will push down further today, then not only could you put your sell stop in case the support level breaks to sell with confirmation of the broken support, but you also could set up the sell limit that if it does come all the way back up to this resistance level up here, that you want to sell from that higher point as well. So we could put in a sell limit to sell from 41.90, something like that, that if it comes up to the resistance up here, that you'd also want to sell. Okay, or 41.95, something like that. We won't take the time to put the sell limit in, but you could. You could have your sell stop below the support and also a sell limit set up here. Then you're guaranteed to sell because it's going to hit one of those eventually. Okay, and many times that's a nice way to trade as well. That if you get lucky and it spikes up in what you believe to be a downward market, you'll take the sell limit. Why not? And if it breaks the support, you're in on the sell stop as well. So that's an option, is to also put a pending sell limit from somewhere up here by this resistance level on this US 500 example. You could do the same thing on the US 100, which is the NASDAQ. Okay, you could have a sell limit set up here at this resistance level, a sell limit, and you also could have a sell stop below the support level, support, a sell stop down here to sell. So you could put a sell limit from this price with your stop loss just above that, and you could put a sell stop at the same time if it breaks the support to sell as well. Margaret, we're on NASDAQ right now. I think I brought it up right as you were typing that. So NASDAQ, you could put sell limit from this resistance level if you think the market should push down further today. So if it pops back up to the resistance, a sell limit would sell from that spot. You also could prepare a sell stop from down here. Maybe we'll do an example of a sell limit on the US Tech 100, which is NASDAQ. Pending order, sell limit. 13,000, let's say 700 is just before the resistance. 13,700. Stop loss would be 13, let's say 750. Or let's say 725 even. We can adjust it if we want. Take profit would be back down at the support at 13.6. Okay. I really like that entry point. Okay, if this bounces up and hits and we get an entry point here, our stop loss, I'm just going to cheat it up a little to make sure I'm clear of the resistance. Okay, our stop loss is above all of these high points, so it would have to break to a new high in order to hit our stop loss. And in today's fear, it maybe the likelihood of hitting a new high is low. So we've got our stop loss above all of the highs without having to risk anywhere near what our potential profit would be. So if this goes up and enters, boy, that's a nice, from a technical analysis standpoint and with the fundamentals on your side right now, that's a nice entry point. So you might be cheering the market to go up so you could catch an entry point near this resistance with the idea that you really believe the market will drop at least back down to this support level. No guarantee, but this is trading, right? Combining the fundamentals and the technicals to find an advantage or what you believe to be an advantage with your trades. So we've got the US 500. If the market just drops, we'll be in on that if it breaks the support. We've got the NASDAQ. If the market pushes back up first, we haven't entered on the US 500 yet because it's a sell stop. So if this goes back up, then we enter on the NASDAQ first, right? So one way or another, probably with those two set up, a sell stop on the US 500, a sell limit on the NASDAQ here, one of them will enter eventually, okay? Whether the market pulls back up or if it continues to drop now. Looks like there's a little bit of a bounce occurring before any potential further drop. We could look at the FTSE, it's the same. It's such a global market anymore, even though we're talking about the US bond buying program creating fear on the markets. Look, the FTSE's dropping as well. The DAX dropping as well. It's a downward market today. We knew that before we looked at the charts, just by simply looking at the VIX volatility index being up 4%, right? And looking at a few headlines. So the question is, when, if you want to sell on these instruments, when is the time to sell? You can get in if you're a more patient trader and you don't want to be so exact with your entry points. You can get in now, right? You can do a market sell. If you believe the market will drop, I can take a sell on the DAX. I can say I'll put my stop loss above the first resistance right there. Okay, there's resistance right at this level. And there's another resistance here if I want to have my stop loss a little further away. And my take profit I can put down at the next major support level down here. Okay, because I was less patient with this move, I'm risking more than my potential profit. You see the difference. In order to get above a major resistance level, I had to stretch my stop loss further away than my take profit. So now, could I put my take profit further? Sure, but now I have to go past the support level to make more on my potential profit than what I'm risking. Okay, now I have better potential profit than risk, but it has to break this low point for me to get my profit then, which then makes it less likely, right? So, but if you really believe the market would just keep dropping and not go up, you can do a market move. And this was an example of that. And maybe I like just keeping my take profit at this first support level and saying, okay, fine, I'll go after a smaller profit than what I'm risking on this move. So we just flip the risk reward ratio in order to be less patient, to be more aggressive with entering the market where we think the market maybe should drop. Okay, now what could happen, right? We could have a headline come out right now that says, oh, US decides to increase its bond buying program. All of a sudden the markets would go flying up, right? The US dollar would weaken. The opposite trend would occur just like that. So that's why you always have to manage your risk in a way that makes sense to you. And maybe having a stop loss at a distance that doesn't risk more than you're willing to lose. That type of thing makes sense, or to use AvaProtect to manage the risk, because yes, we know that the sentiment is right now fear and markets are dropping, but that could flip with one headline, right? So always manage the risk. You can ride the wave as you see it now, but always be ready with your stop loss or hedge positions, whatever, just in case the market changes. Yeah, you can cancel trades. The pending orders, just click the X here and it closes it. Doesn't cost you anything to prepare and cancel pending orders, no problem. You can close them anytime. Also, someone was asking about trailing stop. So it's very simple. The trailing stop, after a trade is opened, you can add a trailing stop. Just right click over the open trade, not the pending order, the open trade. And there's the trailing stop option. And you could pick the distance that you want the trailing stop to be behind the live movement, or you could do a custom. Click custom, you can type the number of points back. The trailing stop is a stop loss that follows the high water or low water mark as you move into profits. So it's always X distance back maximum, and can preserve profits beyond that if the movement reverses when you're in profits. So trailing stop, very simple to activate on an open trade. One word of caution about trailing stops: they're client side, they're not server side, meaning they're communicating from the settings on your computer. So when you add a trailing stop from your computer, then if you log out or lose internet connection, the trailing stop's gone. So it's good to have a backup that you still leave a standard stop loss as well when you add a trailing stop that's maybe a little further back with your standard stop loss, just in case you lose internet signal, lose connection, and the trailing stop disappears, then you still have some kind of risk management beyond that with your regular stop loss there as well. You can have both on at the same time. Ronald, that's another topic about trailing stop or about stop losses in general. The question is your stop loss price guaranteed? And the answer is no. And you might say, well, why not? I'm putting my stop loss, 50 points back. Why am I not guaranteed that if it hits that price, that's the price it'll close? And the answer is because markets sometimes can move faster than the system can process to close the trade. It only takes milliseconds to close your trade once the price is hit. But if the market is highly volatile, and in that millisecond that it takes to close the trade, the market slips past your stop loss price by a hair, then you might have a slightly different price than what you wanted. That happens. I take profits too. Happens both ways. There also can be a gap in the market, meaning, sometimes when there's a major announcement, the price jumps on the chart from one price to a price further away, and there was no active price between those spots. So you see an actual gap in the price on the chart. And when there are gaps, whatever price is available, when it returns to a price on the chart, that's the best price you could get if it went past your stop loss. So that happens more often through the weekend, by the way. The close price on Friday, and then the price opens Sunday night / Monday morning. You can have a big difference between those two prices from when the market closed Friday to when it reopens after the weekend. And if that price difference happens to gap past your stop loss, you could end up losing more than what you wanted to. So you have to be careful about carrying trades through the weekend if your stop loss is somewhat close, or if there's expected high volatility. Sometimes you're better off with a shorter term strategy to close out before the weekend and then reopen the next week. Good questions. Okay, so I think we've carried on enough today. I think we've hit home the strategy concept. Fear on the markets. Use your technical analysis to find entry points that maybe trades in the direction that makes sense for that fear that's on the markets. And you could see the trade that I was not selective about. Still trying to decide, is it going to drop with the fear, or is it going to pull back further before maybe potentially dropping? And if it does, well, then we've got the NASDAQ trade ready to enter from a better price. If the market just keeps dropping, we've got the US 500 trade ready to enter if the support level gets broke. And then we've got the market move as an in-between compromise, just entering at the live price. So you see 3 different strategies for the same idea. One being more selective, waiting for it to go up, hopefully, before selling. One taking the market price as it is, and the other actually waiting for it to drop further before selling to wait for confirmation of a downtrend. And all 3 strategies I've enacted at the same time. One is not necessarily better than the other. And actually, many times it's good to diversify your strategy. So we've got 3 different strategies with the same basic premise, that we think there's fear on the market and that major indices and commodities could drop today. Obviously, no guarantee, right? The headlines could change. So we've got stop losses on all of these. All right, everybody, thank you for joining. If there are no further questions, I think we'll kind of end things here. I think we've summed things up pretty much. Tahoe, sorry if I'm mispronouncing your name. Just go to YouTube, and in the search at the top, keyword search YouTube, AvaTrade channel. Keyword search AvaTrade channel when you're on YouTube, and you'll find it. You'll see AvaTrade's logo and X number of 1,000 followers. You'll see it and you can pull that up. Okay. All right, everybody, thanks for joining. Until the next session, good luck with your trading.